The 2026 FIFA World Cup will be the largest ever. 48 nations competing across 3 host countries with 16 venues and more than 5 million fans expected in the stands. We've been looking at hotel prices for group stage stay dates and did quick takes in August last year and then again in October. So it feels like we're due for another check-in with the games right around the corner. So let's walk through what the latest data is showing us. As of the last weekend in April, U.S. host cities are averaging 60% year-over-year growth, Mexico 157%, and Canada 74%. But the story isn't just where these numbers currently stand, it's how they got there. All 3 regions saw the biggest pricing jumps between August and October as hotels perhaps started more actively revenue managing the event. Since October, growth has actually decelerated. Just look at Mexico gaining 65 percentage points of growth between August and October, and then just an additional 6 points since October. US shows similar deceleration, albeit on a smaller scale, and Canada has actually pulled back 11 points since October. Looking at the U.S. city-level data, there's a clear split. Markets with lower baseline pricing, cities like Dallas and Houston and Kansas City, are around 100% growth, essentially double the prices from a year ago. On the other end, Boston and New York currently sit around the 20-ish% growth range, and New York actually ended up dropping 18% from its October level. Seattle advertised prices also fell since October. So what we see is gateway cities with premium pricing have less room to push further, and some are correcting after an initial overshoot. Houston's arc is also particularly notable. It showed negative 5% last August, but that's at least partly a baseline story. Summer 2025 in Houston was stacked, with Beyoncé's Cowboy Carter tour, as well as back-to-back Metallica and Morgan Wallen stadium dates. That heavy event calendar inflated 2025 rates for those same stay dates, making the year-over-year comparisons a bit more tricky. And once World Cup demand really started to pick up, Houston jumped 66 points between October and April to cross the 100% year-over-year growth mark. In Mexico, as of April, Guadalajara stands out at 256% year-over-year growth, increasing more than 3.5 times since a year ago, whereas Monterrey and Mexico City both pulled back from their October peaks, now showing around 107% growth. And in Canada, Toronto appears to be stable around 60% growth after declining early on, and Vancouver settled down to around 88% after peaking at 112% year-over-year growth in October. Real-world events are shaping this picture too. In the US, we have uncertainty and trade policies that may have softened international tourism, which could be limiting some of the pricing power of hotels. All this is to say, for hoteliers in host cities, pricing power is absolutely real, but not unlimited. Lower-priced and more supply-constrained markets are finding more room to push, whereas gateway cities appear to be correcting a bit downward to get the booking pace they want to see. And for properties in non-host cities that are nearby, there's always a spillover opportunity as rates climb to various multiples of last year's levels and price-sensitive travelers seek alternatives. So keep that in mind. Just because you may not be hosting games doesn't mean you can't benefit from the World Cup. We will, of course, be tracking this as kickoff approaches, and we'll be sure to keep you updated of how things shake out. Thank you for tuning into the Spotlight Podcast. My name is Blake Ryder. We will be back next week, as always, with another Lighthouse Quick Take.